Very good afternoon to all of you. Today we have a very eminent panel emanating from PMS and AF industry. So now all of you are in some stage venturing into mutual fund. Deepak, you started about a month back. Your maiden fund got launched. And Madhu, your fund is getting launched in maybe a week's time, and you are launching 4 schemes. In the history of mutual funds, you have not seen 4 NFOs in a single day. So you are launching. And Marcellus, Saurav, I think you got the SEBI in principle and awaiting final approval from SEBI, and hopefully that comes soon. And because you are still in the leg of applying for a SEBI in principle, waiting for SEBI in principle approval, right? So the journey has been pretty good for each of you. So my point is, like, in terms of all of you are transitioning from a PMS or AF space, and mutual fund industry has been fairly competitive. My first question is to Saurav. Saurav, like in India, like if you see, like about 15 years back, there were close to about 45 odd asset management companies. Today, as we speak, after 15 years, still we have 45 to 47 asset management companies. There were global behemoths like JP Morgan, Morgan Stanley, Fidelity, ABN AMRO, Standard Chartered, Allianz. Umpteen number of global players venture into the market. And now, not many of the global players have survived in Indian markets. Now we are seeing an influx of portfolio managers, domestic PMS and AF providers entering into this market space. So don't you think this industry is tough? Are we repeating the same thing, or still long way for domestic asset managers to penetrate into this market?
No, so thank you for inviting me, and very intriguing panel you put together, right? Normally, your pehla wala panel is the par for the course, but this is a very interesting group of people you put on the stage. And lovely question to begin with. So here is how I see it, right? Agar aap dekho, our industry's profit pool actually isn't that big by global standards. So just to give a sense of perspective, Fidelity alone makes $10 billion of profit. Fidelity alone makes $10 billion of profit. Assume that a global player comes to India. Assume a global player comes to India. Good outcome will be kitna? $100 million profit kama lega, 800-900 crore kama lega. Suppose Fidelity does come again. Remember, they used to be here, they left. Suppose they come back, right? Even if they make $100 million profit, that will grow their profit pie by 1%, right? Now, why is that? Why is the Indian profit pool, the mutual fund industry profit pool? And that's why I loved the previous panel, right? They were sort of saying, "Thanda ho jao boss, utna garam hone ka zarurat nahi hai," because our industry is actually still quite small by global standards. We're just at the beginning. India's market cap is 3% of global market cap, right? India's market cap is 3% of global market cap. Even within that, because our free float is low, we are the lowest free float amongst the world's 10 big markets. The profit pie at the moment for our industry is still small. It's the beginning of the mutual fund industry. We all get very excited by the numbers. But when you look at the behemoths, the global behemoths, in their comparison, we are a tiny industry, right? And that's why I don't think at this juncture, we will be of so much interest to the global houses, right? The Indian mutual fund industry, global houses ke liye utna interesting nahi hai, because our profit pie is pretty small. For obvious reasons, the Indian mutual fund industry is of interest to smaller players like ourselves. For us, building a mutual fund, getting to $100 million of profitability is a good aspirational target to aim for. For the global players, not so much. I think the next 10 years will be about more smaller Indian firms entering the mutual fund industry. I think we'll bring innovative products. Most of the smaller firms will bring innovative products. The established giants will give you the plain vanilla offerings. The newer players will come with the butterscotch and the toppings and so on. It'll be an interesting space, but I'm not so sure the global players are that interested in India, given that the profit pool of the mutual fund industry is still tiny by global standards.
Fantastic, Saurav. So slightly a different question to you, Deepak. See, you have been doing fairly well in the PMS and AF space. Today, if you see, Indian AF industry has close to about 70,000 unique investors. The PMS is roughly less than 2 lakh unique investors. Now you're entering into a space which has 5.6 crore plus unique investors. And there are like bigger brands, especially banks, broking houses. How do you stay afloat, or how do you differentiate yourself in terms of reaching out to this larger pool of investors through distributors or various other means?
Good question, Senthil. In fact, one of the things that is interesting is from the banks and the broking world, which have traditionally sponsored PMSs. Now it's the, sponsored mutual funds. Now they're coming from an asset management background. So the PMSs, the AIFs are actually going in. I think it's a natural progression, because if you can manage assets in a certain way and use a lot of technology to manage those assets in the first place. And I think then expanding to a larger retail universe is a natural consequence, but also affords you opportunity, because it is the same customer who is looking at, say, high equity returns, who also wants something that is safety oriented and also tax efficient, or an investment into, say, gold, or assets where, say, a PMS or an AIF will find it difficult to actually create an investment product in. International equities, all of these have restrictions from a regulatory perspective for what maybe a PMS can do, but also is something that a customer actually wants. So one is a layer of investment products that can service the need of customers, whether they're high or low net worth is one thing. Secondly, it is a democratization of asset management, in the sense the same asset management is available to you now, was available to relatively economically richer people in that sense, is now available to everyone. In that sense, so there's that democratization that is happening regardless, and it's the same thing that technology has given us. Earlier, only Bollywood would make movies. Now, all of us are making movies. Every day on YouTube, some selfie, something. So it's a democratization of everything through technology. So why not asset management in that sense, right? So I think it is at some level the coming of age of India. It used to be that a lot of the asset management companies were also sponsored by foreign entities. And now, increasingly so, it is being managed by domestic entities. Even the larger firms have seen a shift into domestic entities as well. So I think that is also a change that is happening. How do you differentiate? I think the idea is technology. Use technology much more. There is so much happening in this space. It's whether it is AI or something else and all that. So there is a layer that you can use to communicate with people in a much better way. I think even distributors, now today, I think we are in Mumbai. We are an investment house sitting in Bangalore. It was probably unimaginable 15 years back that you could do anything from another place. In fact, Chennai was the only place, I think, which had 2 asset management companies, but otherwise there was nobody else. Now there are 4 asset management companies in Bangalore. They're probably more spreading across. Geographical changes means that your reaching customers has changed from being, I have to physically be there, to I have to digitally be there. So we're talking of Zoom webinars, we're talking of communication going through videos, through content, through emails and text. And because it's become much easier to do that, I think it is up to us as asset managers to harness that and bring our view to customers more often. I don't think it is so much in terms of competition that matters, but it is the incremental investor that comes today that has a choice of more asset management companies, and the pie grows and spreads. It doesn't get distributed as a pie itself. So incremental growth, if India were to double from here, is another 75 lakh crores. And we will double in about 7-8 years just as a natural consequence. So if there's another 75 lakh crores coming into the industry, we don't actually have to go and take someone away from a current asset management company, from our competition. We just have to meet the newer people that are coming in, and whether it is Gen Z or Gen, I don't even know what number I am probably Gen X or even earlier. But whatever it is, our needs are different, and we will have to find, all of us are digitally enabled in some way or the other. And I think we will have to strive to get there.
Thanks, Deepak. Like so brilliantly said, like you are not focusing on the pie, but just enlarging the cake. So that is the pivotal focus. So there are a lot of opportunities within the landscape. So now moving on to Vikas. So you are among this the youngest in terms of SEBI approval process, in terms of applying for a mutual fund business. See, today, like I see at least 10 more applications lined up with SEBI in terms of new MF licenses. All of you are applying for full-fledged mutual fund licenses. And today, there is a perception among the market participants that PMS industry will be disrupted by SIFs. So are these asset management companies, including yours, are you trying to ride the SIF wave through mutual funds, or genuinely there is opportunity as far as retail and other segments as far as concerned?
So I think every mutual fund investor, every person who is applying for, I'm sure, has a different strategy. Everybody will not have a same strategy or common strategy for building their business, because I think it's very established that it is a very large opportunity. If you take a 10, 20-year view, at least we are taking a 10, 20, 30-year view in terms of building the... I think whenever an industry becomes very large, one of the, at least our belief, why we are thinking and doing is that the innovation generally happens by the challengers, the new players, right? Of course, there was a time when the brand mattered a lot. You touched upon the topic of brand. But think about it. What does brand offer? We are buying a soap or a consumer product, why does brand matter there? Because those industries are not regulated. What kind of product quality I will get is determined by the seller, not by somebody else, right? It means if I am a good brand and a credible brand, customer will care for me, come to me repeatedly, right? If I am buying apparel, again brand matters because nobody is regulating the quality of that, right? In case of asset management, our industry is very, very well regulated, right? A mutual fund scheme of mine versus Prudential or versus somebody else, the quality part is given. Trust is built from basically, will there be fraud, cheating, all those things won't happen because it's very regulated. Now what matters is performance, right? So ultimately it's very clear, right? So I feel that brand play initially might have played a role when it was an evolving industry, but when it goes from here to next 10, 15, 20 years, brand may not be as relevant. The innovation, the performance, agility, customer service, all those things play far, far more role, in my opinion, in building new age AMCs. Now, what strategy to take? SIF, no SIF, it's again individual strategies. But I do believe that, again, as the prosperity level of any country increases, like maybe 10 years ago, 20 years ago, we had so much need, but there's a thing, as heterogeneity of investor, different kind of needs of the investors go up. There was no product called structured credit 20 years ago, 15 years ago, 10 years ago. Today it is a size and scale. Now, why that can't be in the mutual fund industry? It can be, provided regulator supports it. Now, so like this, different kinds of products will evolve, needs will come. SIF is again a result of that only, right? So I feel there's a tremendous scope for innovation, and we must not forget that still we are at an early stage of our growth. We are only $2,500 GDP per capita. As we go to $15,000, $20,000, just to again put some number in context, today we are only $5 trillion market cap in and around with the 1.2 times GDP. If our GDP is in Amrit Kal expected to be $29-30 trillion by the time next 25 years, let's say, our market cap can be $40-50 trillion. Now, that's the kind of size and scale you are talking about, thinking about. Now, do you think it will be catered by 40 people? In my opinion, there will be 100 people, 200 people, and there will be regional AMCs. There will be different niches, different positioning, different catering to different needs. So it is again really up to the individual AMCs to carve out their niche, and there will be people who will say, I'll build AMC with burning thousands of crores. There will be AMCs, I'll be profitable from day one. And both can exist and both can be successful. We have seen Parag model to, recently somebody was there on the stage, they burned money and all building business. Right? So there are many models, and power to everyone. That's the beauty of the market.
Well said, Vikas. Now, moving on to Madhu. See, you have a couple of funds like your Bharat Value Fund, where you are predominantly operating in the private market space and fairly successful in terms of garnering assets in the private market space. Now you are venturing into public market space, that too with 4 NFOs all together. So what is your learnings from private market space, being a private market AIF and always also being in PMS? How do you think that will translate into your MF business?
Thank you, Senthil, and congratulations, Karvi, for this achievement and number of years. So, in private equity, the one thing which we all know is there is no exit. There is no liquidity in our stocks, in our companies where we invest. So deep diligence, and a lot of other factors, low use of technology, we all have spoken about how we basically use our time in scrutinizing thousands of companies and then ensuring in very few of them. So that's the DNA which the wealth company brings in. We bring the private equity approach to investing. And as our earlier speaker said, the dharma of any company, of any AMC or an entrepreneur is to make returns for our investors. And secondly, business is also about impact. So whichever vertical I've created since 2014, I've always wondered that if I'm able to create an impact. So same in mutual fund also, we have chosen the MFD route because we believe at the pin code where our investors are there, we sitting at AC cabins and AC halls can't reach there. So we need our MFD friends, we need our fraternity because they are the ones who are closer to the investors. They are the ones who understand their needs, understand asset allocation, understand their goal plan and all. So that's the second route we are taking. So building private equity approach to mutual fund investing and mapping it together with the community for a farther reach.
Great, Madhu, and best wishes for your upcoming NFO. And just moving on to Saurabh. See, if you see the recent trend of new AMCs, see why I'm just belaboring more on the new AMCs is it's like transitioning from, the topic itself, transitioning from high street to main street. If you see most of the new AMCs which are setting up, they are launching flexi cap funds with a flavor of mid cap, small cap. But traditionally in a market like India where low beta stocks have persistently outperformed high beta stocks, being a new AMC, why to take that incremental risk of launching with the flavor of small and mid caps when the valuations are frothy? What is your views?
Okay, so let me say something which will be thoda sa controversial. मजा आता है तब जब कुछ controversial बोला जाए. So 2004, I remember coming to India on holiday. I used to stay outside then. And I remember walking into a Tanishq store in Bombay, and I enjoyed walking into a Tanishq store. मुझे को अच्छा लगा. So I asked my other relatives, ये तो टाटा का ज्वेलर लग रहा है, अच्छा ज्वेलर लग रहा है. How big can it be? Can it be a market leader? 2004 की बात कर रहा, right? Tanishq had started in I think the late 80s, early 90s, but even by 2004 it wasn't actually making money, right? He wasn't making money, but I asked my relatives, can this be a big company? They said, नहीं family jewelry India में, family jeweler will dominate, corporate jewelry brand का क्या future है? Right? So I thought, yeah, that's what they're saying, let's see. By 2014, Tanishq was the largest jeweler in India, right? I'm deliberately choosing jewelry, conservative industry, probably thousands of years old, and a corporate jeweler from the house of Tata came and became the largest. Today, I think they're 3x the largest than the closest competitor. In 2008, I migrated to this lovely city. I remember asking my friends in the brokerage industry 2014-15 के आसपास कि Zerodha आया है बैंगलोर में, क्या लगता है कितना बड़ा बन सकता है, right? Remember there are 10,000 SEBI registered brokers. There are 10,000 SEBI registered brokers. So 2014-15 Zerodha आया, shortly thereafter Grow आया. तो मैंने पूछा कितना बड़ा बन सकता है, उन्होंने बोला यार ये ऑनलाइन कितना और बड़ा चलेगा, एक नीश होगा, ऑनलाइन का एक नीश होगा. And today, if I'm not mistaken, Zerodha is the largest broker in the country. Grow might not be very far behind, right? So what we are seeing, right, in something as conservative as jewelry and something as straightforward as broking. If you had to choose a financial services transaction which is straightforward, you would say the broking transaction is the most straightforward. We are seeing in disruptors coming in completely blowing the incumbents apart. I would submit to you that अगले 10 साल में asset management में same होगा. right? And naturally, the disruptor will not be an incumbent, right? Incumbents is शहर में है. The disruptors might come from Bombay, it might be Vikas, it might come from Bangalore, it might be Capital Mind, but disruptor आएगा asset management में as night follows day, right? The current business model will be upended. Now, it's in that vein, let me now tackle your question. जो आज लोग कर रहे हैं flexi cap में, will that be the way to run flexi cap? I'm not so sure, right? What I'm sure about is, when you see other countries, when you see the US asset management industry's evolution, when you see the British asset management industry's evolution, there are two trends which stand out as a country's asset management industry evolves. The first trend is that asset allocation becomes a far bigger driver of wealth creation than stock picking, right? So, करीबन 25 साल पहले, 25 years ago, a bunch of academics in, I think, Chicago, wrote a celebrated paper where they showed that 90% of wealth creation is driven by asset allocation. Figuring out Asian Paints खरीदना या Akzo Nobel खरीदना है is a secondary decision. Your allocation to Indian equities, global equities, bonds, precious metals is a far bigger call. So if that's how the Western asset management industry is evolved, I would submit to you as India evolves, the multi-asset product or the hybrid product will become the mainstay of many asset management houses. Secondly, the FlexiCap product works because it allows fund managers to move across the market cap spectrum. Every country goes through small cap booms and busts. It's part and parcel of capital market cycle. There's no shame in it. You go through small cap booms for 3-4 years, then फट जाता है, 5-6 साल ठंडा रहता है, फिर 3-4 years boom. A flexi cap product toggles across market cap spectrums, and usually in most countries, the first piece, the bigger piece, is the asset allocation product. The second piece is the flexi cap product, and then there are more niche products. So there will be disruptors. I think disruption is inevitable in Indian asset management. Let's hope the disruptor is from the city of Mumbai, but I have a high suspicion the disruptor might be from the city of Bangalore, because Bangalore ka jo tech DNA hai is incredible. But leaving aside disruption on the business model side, what's clear is as the industry evolves, asset allocation and flexi cap will become the mainstay products of the industry.
Okay, very well said, Saurav. So just an extension of this to Vikas, since you run a fairly successful PMS and also large AAF, don't you think the expertise is more on taking concentrated bets, betting on quality versus quantity? Now coming into mutual funds, what are the best practices which you think would be translated from PMS to mutual funds? And what is one thing which you should avoid from an investment parlance?
So I think, we don't think this way, but think about it. The way I think, whether it is PMS, AIF or mutual fund, it is like, another crude way to think about it, the privately limited company or partnership. These are only structures and platforms. The real thing is about the strategies behind that, the ability to make money, ability to construct portfolios, right? Now, obviously, mutual fund is highly regulated, hence you have to a minimum sort of structure to size and scale to get there, and you can start in PMS and AIF with. But eventually, the whole idea is to make money, generate alpha, and superior risk-adjusted alpha. That does not change. That does not change based on asset class. That does not change based on whether you large cap, mid cap, anything, right? Eventually, that is what one has to look at. So our approach has always been, focus on generating superior risk-adjusted return and run concentrated bets, because, money is made only out of conviction. And we believe that, we spend a lot of time, energy, knowledge, everything to build our conviction. And once we are convinced, then we don't want to, and there's a saying that, diversification is a hedge against ignorance. So you don't want to be too diversified, which basically, spread out too thin, but at the same time, you should not be too concentrated where the unsystemic risk brings you down. So it should be fair sort of concentration, but key idea is actually to bet on your conviction. And other thing which I feel that, and another big difference between the new age or the upcoming startup, so to say, in this industry, is that there was a time when most of the mutual funds were institution-led, institution-sponsored, right? And for the same reason I said that it needed to build credibility, trust, regulation, everything else, all those things, right? But at some point, as these institutions grow, size also becomes in some sense enemy of your performance. And also they become in some sense, quote unquote, there's a founder-led versus, there's a big difference between a founder-led startup outcome versus an institutional-led. And that's the reason there's a lot more innovation happens at a founder-led, right? All of us are putting everything of ours, blood, sweat, money, everything else, right? So for us, to make it successful is far, far more critical than for somebody who's doing a job. And I'm not, belittling anybody in an incumbent space, and I'm not saying that they don't have a game, and there's a space for everybody, but I feel that the new age or the new AMCs have far, far more drive, hunger, motivation to make it happen on innovation front, so I would say that, and everybody will have their own style. Our style is to go for high conviction, a little bit moderately concentrated, and go for superior risk-adjusted return, be it any asset class, be it debt, equity, or hybrid.
Brilliantly said.
I don't mind my supplementing. I think this is I think Vikas picked up on something really important. पहली बार इंडिया के हिस्ट्री में, first time in Indian history, the people who will run asset management firms are the people who are putting their money on the line, right? अब तक हमारा we had a corporatized asset management industry. Good for that, because asset management industry as a concept itself had to be proven. The fact that you can run money for 50 million people, 5 crore लोगों का पैसा सुरक्षित तरीके से आप manage कर सकते हो, that had to be proven as a concept. Kudos to the corporate community for showing that. Now the entrepreneurs are entering, and I think Vikas is perfectly right in saying, as the entrepreneur enters, because he or she is putting everything on the line, the level of innovation, the level of aggression will be on a different footing to what we've historically seen in our country. And that's what makes me very confident. आज से 10 साल बाद, when KFintech hosts us hopefully again, when 10 years hence KFintech hosts people like us again, the leaders in this industry will be the entrants, the innovators.
Thanks and brilliant, sir. So before I come to you, Deepak, I'll just take one question from Madhu. Madhu, we have seen so many new fund houses getting launched. So you have taken a distributor-first approach. Even before the launch of your funds, you have done some events in Guwahati. You have done some SIF training for some 4,000 odd distributors, and there are umpteen number of distribution roadshows which are happening. How's the acceptance among the distribution community being a new AMC? Because I've been with the asset management industry for 22 years. So being a new AMC, what are the challenges which you are facing and what are the opportunities you see ahead, especially from the distribution fraternity?
See, जैसे विकास ने बताया, जब आप फाउंडर उतरता है तो challenges कुछ नहीं होते हैं. It's all about the opportunity. So I see a big, big blue ocean which we have just entered, firstly. Secondly, as I mentioned, whenever we start any business, we start that are we creating an impact or not? Which is why MFD? So as you would know, we have R.S. Sarma and Rashmi Verma, and we have 3 IS officers on our board. So when we were discussing that why we have to go the MFD route and not the direct route, and I'll tell you some points and problems which this industry is currently facing. And our earlier speakers also spoke about that a lot of fintechs are taking away the share. And let me tell you, none of them are making money. So धंधे का मतलब होता है profit बनाना. So we all understand as promoters कि पैसा बनना चाहिए, पहली बात. दूसरी बात, हमारे partners का क्या issue है? Partners का issue ये है, they don't adopt technology, which is why today 4 PM for our registered partners we have launched AI, कि आप 2 मिनट में website बना सकते हो. Senthil is so alarming, 80% of our MFDs don't have a website. 90% of them don't have social media presence. आपको अगर यही चीज़ें नहीं आएगी, तो आप धंधा कैसे करोगे? Right? The client, how will the client have trust on you? Third, we saw people only want to sell MF. Asset allocation, बहुत important है. आप नहीं बेचोगे, कोई और बेचेगा और आपका शेयर भी लेके जाएगा. तो इसके लिए हमने SIF ट्रेनिंग, मूडीज़ के साथ इंटरनेशनल वेल्थ मैनेजमेंट ट्रेनिंग, AI ट्रेनिंग, and how we create more mutual fund distributors. This is where we have launched MF Didi program. And already it is just 3 weeks, we have more than 1,200 MF Didis from across the country. And I'm not, कि मैं खाली females को ही, also for males. हमने MF दोस्त भी launch किया है. It's just the programs are starting. So कम्युनिटी को बड़ा करने में दिस इज़ व्हाट माय रोल इज़. एंड जब एज आई सेड जब ये डिस्कशन हो रहा था विद माय डायरेक्टर्स कि वाई डायरेक्ट एंड वाई MFD and why not direct, so I remembered a poem which I learned from class 9. So sorry, I will speak in Hindi. I'm from that background. So the poem goes like this: आग लगी इस वृक्ष में, जलने लागे पात, उड़ते क्यों नहीं पंछियों जब पंख तुम्हारे पास. तो हमारे जैसे लोग बोलते हैं फल खाए इस वृक्ष से गंदे कीने पात, यही हमारा हम AMCs का धर्म है, जले इन्हीं के साथ. Thank you.
Brilliant, brilliant. Fantastic. So because of paucity of time, one last question to you, Deepak. So now, again, there is a new trend which has been started. Like everybody is getting into data-driven investment approach with the overlay of fund management. Geo started, and you also follow some of the principles of data-driven investment approach with the overlay of investment. But if you see, traditionally, Indian asset management has seen iconic fund managers driving the growth. So today, it's very difficult for me to see completely data-driven approach. Do you think it will work, and how do you stand differentiated compared to umpteen number of other players who are coming into the market?
So Senthil, I am a computer engineer. So I will always say that data only will work because I come from a computer engineering background. I moved into this space in this way. But I've learned one thing. You can make money in 100 ways in asset management. 100 different ways. All of them will work. They just need the discipline and time to succeed. And if you do it well, you will make money. No matter what, you tell me day trading doesn't work. There are the people who do day trading and they work. There are people who make money on short-term trading. There are people who make money on long-term, fundamental-driven, technical-driven, quant-driven, whatever it is. I think everybody chooses what defines them as an investor. If you asked me, I am very comfortable doing quant-driven investing. But I know tomorrow that we will have managers who will do fundamental-driven investing. There will be others who will do an arbitrage strategy, may not be fundamental or quant. It may be some hybrid, something in middle kind of investing. But whatever it is, I think there are many things that will make it. So I don't say one approach works. I think many approaches will work. You choose the way that makes, that the manager can identify the most with. And eventually people will also identify with that approach. You can use quant today in debt investing. It is used very commonly across the world. But India में debt में किसी ने अभी तक कोई quant level का thought process नहीं डाला है. That means tomorrow there will be some quant funds coming for debt also, for hybrids also. They will all be all of these approaches. I think we will eventually have to figure out that a lot of approaches work. अगर कल को कोई और market भी आया, जैसे today we are not allowed to access crypto markets. Tomorrow maybe they will allow it. And that time there will be different approaches that will come there also, maybe technology driven. So we cannot say no to anything. I think we should be open to different avenues of investing. But in that process, you can always say, I don't want to do that because that doesn't meet my criteria. I will be good at this. And people will look at us and we have to communicate to everyone that we are good at this. But doesn't mean you don't make money using, I mean, you don't choose somebody else also because maybe you can take a diversification of styles. But we can, I think in the end, our idea is to communicate how we do our approach is like this. And over time, all approaches will eventually make money because those are the only people that survive. The people who don't survive, you don't even remember today. But the people who survive, that's why you say they're iconic fund managers. They're iconic fund managers because I think they've survived this long. And that itself, in India, survival is a feature. If you have survived 40 years, you almost get 5 marks credit for that only. So nowadays, we don't get that credit. So for me to survive, I have to do something that allows me to survive. So naturally, I have to do something that is different. And I think our approach of using data-driven approaches is one approach. It is well tried, well tested in the West. It's relatively less tested here. But I will not tell you or anybody here that ours is the only approach that will win. I'm sure all of us will win. Let's all win at different points, different times in life, but let's all win at life.
So brilliant, ladies and gentlemen. So as I could comprehend from this panel, there is white space across the industry and there are opportunities are plenty. So definitely more and more PMS players, AIF players will come and disrupt the mutual fund industry. And wishing you all the best for your new MF journey. Thank you. Thank you, gentlemen.
Well, thank you so much for sharing your knowledge and inputs with us. Can I please request you to remain on stage for a few more moments? And now to felicitate our panel, I would like to invite Mr. Prem Khatri, please. Can we have an applause as he walks up? Well, let's begin with Mr. Senthil. Let's begin the felicitation with Mr. Senthil G. Next, we have Mr. Deepak Shenoy. Ladies and gentlemen, taaliyan bajti rehni chahiye. All right, next up we have Miss Madhu Lunawat. Let's now felicitate Mr. Saurabh Mukherjee. And finally, let's felicitate Mr. Vikas Khemani. If I may request you to please step forward so that we can capture this wonderful moment. Requesting all our leaders to please step forward. Thank you. Let's take a group picture, please.